Hello and welcome back to Simple Money Podcast, Canada's own personal finance podcast presented in short and informative episodes. I'm your host, Matthew Seawick, also known as the Friendly Financial Coach. And today we're going to talk about how COVID-19 benefits are going to be taxed and how some recently released updates will change how these tax bills will be treated. We'll also talk about what is going to happen to those small businesses that thought that they qualified for the COVID-19 benefits, but were then later told by the CRA that they didn't. And as always, if you're enjoying the show, please consider making a small donation to us over Patreon. The link will be in the podcast show notes, and many, many thanks in advance. So millions of Canadians have received some form of COVID-19 benefits during 2020 to help support them during the ongoing pandemic. And we're all pretty familiar with these benefits by now, but they include CERB, CRB, the Enhanced EI program, and more. There's just a whole soup of acronyms that are out there. And we've spoken extensively about all of these programs on the show in the past. Now, with tax season quickly approaching, understanding how these benefits will be taxed is really, really important. And unfortunately for millions of Canadians, this tax bill will quickly turn into a debt. So to understand how taxes will work in the new programs, let's first look at what most Canadians are used to when they have to deal with income taxes. And that's when you're considered to be an employee. And in this situation, employees pay the majority of their income taxes every time that they're paid, and not when they file their taxes in the spring. And what's happening here is that taxes are being withheld off of each of your pays and is prepaying your taxes in advance. And when the tax deadline comes up, it's more of a period to make adjustments in case you didn't pay enough taxes or if you paid too much. Now, on the flip side, many of the COVID-19 support programs didn't have taxes withheld at source. This was because the government took the position that individuals would be financially better off if they had the full amount of the benefit up front and then resolve the tax burden later in 2021. Well, 2021 is finally here, and now what's happening is that we're quickly approaching this tax deadline, and more details have arisen with how outstanding tax bills due to COVID-19 benefits will be treated. In addition, they also explicitly stated that the tax deadline will not be pushed back this year, unlike in 2020. Included in this release, the government also announced that if you have a tax bill due to COVID-19 benefits and meets certain conditions, then you actually don't need to pay interest on the debt until April 30th of 2022. And this is the equivalent of converting an eligible tax debt to an interest-free loan that is fully payable by the next tax deadline. And to qualify for this interest rate relief, the receiver of the benefits must have had taxable income that was $75,000 or less. And this is going to offer some well-needed breathing room for many Canadians that receive the benefits and are still out of work or are working reduced hours. And if any Canadians want to, you could actually estimate your tax bill in advance by using online income tax calculators and entering in all the information that they've received. The documentation that shows your benefit payment is already available on CRA My Account and was sent out in the mail at the end of January. And many of you probably have not received your employer T4s yet, but to get around this little hitch, what you could do is you could get your last pay stub of 2020 and then use the year-to-date information. And this will actually provide a fairly accurate annual earnings amount that you can use. So to give you a real example of taxation, let's say that person A living in Ontario made $10,000 at the job and received the full $14,000 in CERB. This would equate to a tax bill of just over $2,700 minus any taxes that were withheld on the earnings that they had at their job. So as you can see, this can easily turn into a burden. It wasn't until the second wave of support programs were issued that partial taxes were withheld off of COVID-19 benefits. And the main programs here are CRB, Enhanced EI, and a handful of others. So for example, under the CRB program, 10% of the payments were withheld to be applied to any future outstanding income taxes owing. So if you find out that you do owe money to the CRA for the benefits that you received, it would be a good idea to start looking at creating a payment schedule to have the amount paid off within a year. For example, a $2,500 tax bill would be approximately $96 from a biweekly paycheck over the year. And time is obviously very valuable here, as the longer you wait, the larger the payment amount will be. Also, on a side note, since this debt is 0%, in some cases, it may be worth considering focusing on paying down high interest rate debt before putting money aside for this tax bill. However, you should really speak to a financial professional about this before you follow this route, as this can create certain types of risks. And we also need to be realistic about, our capacity and society's capacity for actually putting money aside to pay this debt. There are still, unfortunately, many Canadians that are not in a position to service any type of payment to get this debt off their books, as many industries are still shut down. So obviously, hospitality and entertainment industries are some of the worst hit that are still shut down. And in these cases, I really hope that there's additional support that's made available by the CRA or federal government to really help these individuals, navigate their difficult situation. So another big announcement that was made about COVID benefit is one that concerns small businesses. So what happened here is that a lot of small businesses thought that they're eligible for the COVID-19 benefits, only to be later sent a letter by the CRA demanding repayment of the amounts that they received. And this problem came out of one of the qualifying details of the program. And the qualifier that is, the issue that we're talking about is one where to qualify for the CERB, individuals had to have earned $5,000 or more in 2019 or in the 12 months preceding their application for the program. And for those that had small businesses, it was not clear if this meant $5,000 in revenue or $5,000 after expenses were deducted, so net or gross income. This was actually not clarified on the documents that were sent to Canadians or posted online for the CERB program. So what happened was that many Canadians with net income under $5,000 were later contacted by the CRA saying that they don't qualify for the program. So I'm also pleased to announce that in this announcement that was issued by the federal government, they said that they would side with the small businesses and allow them to qualify for the program as long as all other requirements were met. And this is obviously going to help out a lot of small business owners that are probably struggling because of the pandemic. So that's it for now. But as always, thank you for listening to Simple Money Podcast. If you're enjoying the show, please consider leaving a review for us. It really, really, really helps us. And if you really like us, please consider sharing us with a friend or family. And if you have any questions or any show suggestions, please do send them my way. You can find me at info@ffcoach.ca. So take care, be safe, and talk to you soon.